All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Tuesday, everybody. Today is January 21st, 2025. And President Trump has signed more than 200 executive orders on his first day in office. The guy wasn't playing around yesterday. His signing hand must be a little sore after this. Some very important executive orders. And to be honest with you, one executive order in particular, I'm really glad he did that. I mean, the single most pressing issue of our day, the issue that is most near and dear to the hearts of Americans, especially people living on Main Street. He went right after that one on day one. I am, of course, talking about the renaming of the Gulf of Mexico to the Gulf of America. Your wildest dreams have finally come true. So we're all very, what the hell? Well, anyway, he did that yesterday. Look, some of the executive orders that he signed, a lot of it is going to take a very long time before any of it shows up in the economic data. Things like the executive orders on the border and immigration, things like executive orders involving energy. These are things that are going to take months and months. If there's any change, it's going to take a long time before we see it start to show up in things like the nuances of the labor reports or the non-farm payrolls. Things like energy policy, that affects CapEx, that affects how many holes we're poking in the ground, but that takes several months, even years, before it starts to show up in the energy data. So we're not really going to know the effects of these things for some time. We can predict them and analyze and try to guess where they're going to go, but we won't know until we won't know. But the big story yesterday with the executive orders and the speech and everything is what he didn't say and what he didn't do yesterday. Two things in particular. The first is tariffs. He did not put his massive 20% tariffs on everything on day one, as he had threatened to do. Interest rates actually fell a little bit on that news because tariffs are viewed as very inflationary. And so the fact that he didn't on day one slam the world with tariffs, the market reacted positively to that. Also, there was a little bit of talk, discussion, consternation even about his lack of mention of any kind of Bitcoin or crypto in his inauguration speech yesterday. Bitcoin went as high as $109,000 yesterday, made a new high. And then, of course, it fell on the lack of a mention to a little like around 101, 102 at one point yesterday, settled around 104. Look, Bitcoin remains within striking distance of an all-time high. Some people were like celebrating that Bitcoin was crashing. I'll use my air quotes for that. Bitcoin didn't crash yesterday. It just didn't hold its new all-time high. And then, of course, there was all the drama over the weekend about Trump token and Melania token. Do we really need to spend time on this? Look, guys, meme coins are stupid. Whether you like the name that's attached to it or you don't, whether it's Trump token, Melania token, or Haktua token, or Martin Shkreli Inu, meme tokens are stupid. And if you're buying into them, some people are making money. Most people are getting wiped out. Good luck to you. Maybe just walk down the head 7-Eleven and drop $1,000 on scratch and sniffs, because there's scratch offs. That's what you're doing essentially. Like I'm hearing the phrase "scambling" is a new one that I heard. I forget who coined that. I'd love to give credit, but I don't know who the first one is that referred to this as scambling, and I like it. It's like you're buying into something that is going to be a scam. At some point, somebody's going to pull the rug on these things because the developers always give themselves 80% control of them. And yet people are buying them anyway, just hoping that it goes up before the rug pull. So, yeah, you're knowingly investing in something that you know is going to crash, just hoping it's going to go high. Scambling, sure. Good luck. And if I might say so a little bit, like just politically speaking, I think it's just not very good politics to do this right now. Look, guys, we are 10 months away, tops, from the next crypto winter. It's going to happen. We've seen crypto winter 3 or 4 times. We know there's going to be some big failure, some big scam or blow up a la FTX or OneCoin or Mt. Gox. These things have happened 3 or 4 times. It's a very predictable cycle. Following a halving, you get 18 months of a rip-your-face-off rally in Bitcoin prices. It drags all the other coins with them. It brings the scammers out of the woodwork. They create a scam so big that it eventually torpedoes Bitcoin prices and the FOMO wears off, right? That's going to happen at some point between now and probably October of this year. That is going to happen. Now, Bitcoin could double again before that happens, or maybe it doesn't. Maybe it happens tomorrow. But just be prepared for it, guys. If you're out there investing in this these garbage tokens have a plan for crypto winter. Also going on this morning, we got another analyst downgrade from Apple, citing another report of slumping iPhone sales. This is, if you're counting, this is the third time in a week and a half that we've been talking about that. This time it's Edison Lee is the analyst downgrading Apple. He's citing weak demand, citing a report that shipments for iPhone 16 were down iPhone shipments as a whole, I should say, down 4% year over year. That includes the new iPhone 16, which was supposed to be the start of a big upgrade super cycle. Remember that stupid talking point that was taking the whole S&P and the whole NASDAQ up higher a few months ago? Everyone's like, oh my God, Apple Intelligence. It's going to be so amazing, even though it doesn't work yet. But it's going to be great. Take my word for it. And everybody bought the stock. Well, how's that working out for you? Right now, the lack of enthusiasm for Apple Intelligence and the iPhone 16 is dragging Apple stock down another 2% this morning. It's down almost 9% just since the start of this year. Turns out there was nothing but a lot of hot air behind all that iPhone 16 talk. Go figure. And we got a very interesting report today. A $1.7 billion write-down is coming from Orsted, the maker of wind turbines. Now, Orsted has been in the news a lot over the last couple of years. They are having all kinds of trouble with these massive offshore wind turbines. Now, included in Trump's 200 plus executive orders yesterday was an executive order that banned all further lease issuance for offshore wind turbines. I may get the language wrong, like existing leases are staying in place, but there's going to be no new leases issued, and they're halting the reviews of any pending leases for offshore wind turbines. Now, here's the thing. This big drop in Orsted today, and the stock was down 13% the last I looked. It's got nothing to do with Trump's executive order. This big write-down happened before the executive order hit. It was basically broken up into three reasons Orsted took this big write-down. The first was a rise in long-term interest rates. That was responsible for roughly 1/3 of the rise of the losses there. Also, you had a big-time reset of the valuation for offshore leases held by New Jersey or offshore from New Jersey, Maryland, and Delaware here in the States. And again, these big write-downs of the value of those leases happened before the executive order, halting the further development. So that write-down is going to get bigger here. And the third reason for this big delay or this big write-down at Orsted was this delay of the completion of the Sunrise Wind project off of Long Island. If you guys are from the Northeast, you've probably heard about these debacles that have been going on offshore. They've been trying to build these massive offshore wind projects. Yay. Unicorns and rainbow, all it's going to power the world with good intentions. Never mind the fact that, number one, a lot of these windmills don't work. That Orsted has had a number of quality control issues. The ones that they have built are already having problems. Number two, it is way, way behind schedule and way, way over budget. See also that Sunrise Wind project. And number three, a trite little detail, they're killing whales. Think that's important. Humpback whales have been beaching themselves by the dozens off the Northeast. And, look, my personal story coming from that same region, the nuclear plant where me and my wife both worked, they shut us down because every now and then on a day like today, say if it was like really cold out like it is, everybody enjoying the cold, if a nuclear reactor were to scram or shut down on a cold day, fish would die in our discharge canal. Not because of radiation or anything like that, but because the warm water would suddenly get cold and it would kill bluefish. And of course, bluefish sells for about $1.17 at the fish market across Barnegat Bay and Viking Village. And because we were killing bluefish if we shut down in the winter, they forced the early closure of the nuclear plant that I worked at. And instead, they're going to build windmills, and those kill humpback whales. But it's good for the environment to do that, right? Because why? I don't know. Because stupid green dogma. That's why. And, again, people wonder why I'm so passionate about the subject of renewables, because they're stupid. They don't work. And this silly story is causing us to do irreparable harm to our power grid. And you idiots are killing whales, and you're unwilling to acknowledge it because you're too afraid of saying something that won't go over well with your stupid drum circle from college. Don't kill whales to build windmills that don't make any power. This should not be a controversial talking point, but it is. Anyways, Orsted is getting crushed this morning off of this news. We got some crazy housing data this morning from Redfin. Home prices rose 6.3% for the month of December. They are rising in every metro area in the United States. What is going on in the housing market? Even though inventory is rising, home sales are in the toilet, the market is frozen, and prices keep rising. Why? I don't know. Maybe there's some financial dirtbaggery afoot. I'm just throwing that one out there. Also, we got 3M earnings this morning. It was pretty interesting. The beat on the top and bottom line for 3M. Stocks up about 4%. They're talking about a return to organic growth. There's also some interesting clues and some interesting macroeconomic data hiding in those 3M earnings that we're going to talk about. And Charles Schwab posted earnings that beat expectations. You've now got more than $10.1 trillion in assets under management for Charles Schwab. They're like a little BlackRock over there. And in case in point, guys, the wealthy, the top 10, we'll say maybe even top 20% of Americans are doing really, really well, apparently, based on those results from Charles Schwab as the money continues to roll in for them to manage. We got a lot to talk about this morning. Why don't we shrink my big melon of a head and let's see what's going on in markets this morning. Don't forget that like button for the YouTube algorithm. And if you're new here, hit that subscribe button so you can come back and have your coffee with the melon heads because we do this every morning. Right now, the S&P 500 is up 0.5%, 29 points higher ahead of the opening bell. We've got the Dow is up 181 points, about 0.4% higher. I think that 3M results is probably contributing to the big move in the Dow. And the NASDAQ is up 129 points, 0.61% higher. So we got stocks are up across the board this morning. The DXY, meanwhile, is at 108.42. That is technically higher by about 34 basis points this morning, although it is down a little bit from where we were just a few minutes ago. The dollar weakened pretty substantially yesterday on the lack of mention of the tariffs. That caused a little bit of the cooling off of this massive run that the Dixie has been on for the last couple of weeks. And looking at the bond market, we have got yields are lower pretty much across the board here this morning. The 30-year Treasury, 4.792. That's down about 5 basis points. The 10-year is also down 5 basis points to 4.561. The 2-year is down almost 2 points at 4.255, and the 1 month is at 4.310. That's down a fraction of a point here. We got this one in Market Watch this morning. Treasury yields fall after Trump doesn't follow through on immediate tariff pledge. Maybe the market's getting a little bit too anxious here, expecting the tariffs on day one, and they didn't show up, so yields fall. Well, I guess everybody was expecting that first day action there. U.S. bond yields fell early Tuesday as Treasuries returned from the holiday weekend and got the first chance to welcome news that President Donald Trump did not immediately announce a swath of tariffs on U.S. imports. With no top drawer economic data due Tuesday and with Federal Reserve officials in the media blackout period ahead of next week's policy meeting, bond investors were focusing on what did not happen in Washington. Contrary to his previous pledges, President Trump did not slap a range of tariffs on goods coming into the U.S. immediately after his inauguration. Guys, it's been like 12 hours, maybe jumping the gun a little bit here. Import tariffs are considered by many investors to be inflationary and thus damaging to bonds, and the possibility of their arrival has contributed to the move higher in benchmark Treasury yields since Trump's election victory in early November. Looking over at the commodities board this morning, we've got spot gold is higher by about $20 here, $2,729 for gold. That's up about 0.75%. Spot silver is at $30.65. That's higher by about 12 cents this morning, or 0.4% higher. I like the shiny. We've got copper is down about 1.4%. Platinum is down 0.33%. Palladium is down almost 2%. And crude oil is lower this morning also, 75.48 for March WTI futures. That's down about $1.92. Taking a look at Bitcoin here, guys. These are daily candles on the Bitcoin chart. You can see we had a big wick on that candle yesterday because Bitcoin made a new high. We went as high as $109,358 yesterday before settling the day pretty much around 102,000. Right now, we're at about 104,674. That is as priced on Coinbase, higher by about $2,500 this morning. Now, there was a lot of talk on Twitter and FinTwit yesterday about the lack of a mention with crypto. And we got this one in Barron's this morning. Bitcoin and Trump token fall. Why inauguration day left crypto bulls disappointed. I'll be honest, I'm not a crypto bull. I am a Bitcoin bull, and I was not disappointed yesterday. I had very low expectations of yesterday, to be honest with you. But hey, that's what the article's saying. Bitcoin and other digital assets were sliding on Tuesday after President Donald Trump's first day in office left crypto bulls feeling underwhelmed The world's largest token was down 1.3% to 104,452 over the past 24 hours, according to data from crypto exchange Kraken, trading about 4% short of the previous record high from about 12 hours ago. The cryptos launched by the Trump family late Friday also dropped over the past 24 hours. The official Trump token plunged 29% to about $38, and the Melania meme coin tumbled 54% to just over $4 per Kraken. Guys, if you're buying this stuff, seek help. That's all I'm going to throw out there. After months of excitement, Trump's inauguration day ended up being a non-event for cryptos. While the 47th president signed a flurry of executive orders, none of them addressed the digital assets sector. Look, that's a lack of great news for crypto, but I don't necessarily think it's bad news. The guy did 200 things on day one. Look, one of them was renaming the Gulf of Mexico, and I guess the fact that that ranks higher on his list than Bitcoin, okay, when you view it in that context, it's not entirely bullish. But again, Bitcoin is within striking distance of an all-time high here. I'm not too worried about the lack of a mention there. One thing that should have people worried, though, is this one in Barron's this morning. Apple stock just got downgraded again. Why this analyst is worried. This one from just this morning. Apple, the most valuable stock in the world, was slipping early Tuesday after analyst Jefferies downgraded its shares. Forecasts for soft iPhone sales and a weaker update of new artificial intelligence features prompted strategists led by Edison Lee to lower their rating to underperform from hold. They also reduced their price target by 13% to $200.75. Our concern about weak demand for iPhone has materialized, they said in a note late Monday, citing a report saying shipments were down 4% in the quarter ended in December. AI would be unlikely to kickstart a super upgrade cycle anytime soon. In other words, what Jack has been saying since they announced the iPhone 16 has been realized. That's the third person to do so in a week. But, hey, they got their FOMO rally. They got everybody to buy into the S&P and pile in the passive ETFs and everything just on what? On hype of a super cycle. Well, Apple's down about 1.9% this morning. It's down almost 9% year to date. We're trading at $225.46 here this morning. Now, let's talk about Orsted. This one was pretty crazy. This wind power company just took a $1.7 billion write-down, and that excludes the impact of Trump's executive order. And that's the big thing there. I checked out a couple of articles about this story before I realized that last part, that it doesn't even include the impact of the executive order. It was really looking like it was this Trump executive order that tanked Orsted, but that is not the case. The company's saying, no, we took this $1.7 billion hit before that got signed, which means the $1.7 billion hit is going to get bigger. Orsted blames rising interest rates and project delays. Shares of Orsted fell as much as 18% on Tuesday after the company announced a 12.1 billion Danish kroner, that's about $1.7 billion, write-down that the Danish wind power company says didn't include the impact of an executive order signed by President Donald Trump. Orsted took a 4.3 billion kroner write-down from the rise in long-dated U.S. interest rates. In other words, those Treasury yields moving higher. That's bond prices moving lower. Orsted took a big hit on that. They also took a 3.5 billion kroner hit from the reduced valuation of its seabed leases off the coast of New Jersey, Maryland, and Delaware. And that is where it's going to get bigger because those leases are going to be worth even less now that President Trump has halted any reviews or renewals on those. And on top of that, we've got a 4.3 billion kroner impairment on the delayed commissioning and higher than expected project costs for the Sunrise Wind Project, which is 30 miles east of Long Island's Montauk Point. The Sunrise Wind impairment is particularly disappointing as it further exemplifies the execution risks with U.S. offshore wind and will be unhelpful for the case for U.S. offshore wind development, said analysts at Jefferies. Analysts at JP Morgan said the announced impairments were 3 times more than they had expected from the move in bond yields alone. The company said the write-down did not include any impact from Trump's order signed on Monday that paused all federal leasing and permitting for both onshore and offshore wind projects. We are in the process of reviewing it to assess the impact on our portfolio, said CEO Mads Nipper on a call with analysts. So Orsted stock getting clobbered here. It's down 13.4% ahead of the opening bell, trading at 270. I believe this is Swedish kroner here, down pretty big this morning. Things not going to get better for this company. But again, the Trump story is going to make this worse. but this was already in progress. The failure to execute on that project in Long Island, the write-down of the valuation of those leases off of New Jersey and Delaware and Maryland, those were a long time coming. They were going to happen anyway. Now that this executive order has been signed, it's going to further devalue those leases. And, of course, the rise in interest rates, that one kind of came out of left field. Wasn't expecting that one, but it apparently J.P. Morgan was expecting it, and it was 3 times bigger than even they were expecting. So things for this company are not looking so good. Also, we got some housing data. This one really had me and Mitch scratching our heads this morning. I'll be honest with you guys. I don't know what the hell is going on in the housing market here, but we got this one from Redfin. Home prices are rising in every major metro area for the first time since 2022. WTF is going on in the housing market. In Cleveland alone, prices jumped 15% year over year in December, the biggest increase among the 50 most populous metros. Apparently, big things are happening in Cleveland these days. Next came Milwaukee and Philadelphia. Florida is home to the 3 metros where prices rose the least. Home prices rose from a year earlier in all 50 of the most populous U.S. metropolitan areas in December, the first time that has occurred since May of 2022, when the pandemic home buying frenzy caused prices to skyrocket. By comparison, home prices rose in 41 metros in December of 2023. Home prices soared during the pandemic as record low mortgage rates fueled homebuyer demand and then fell in 2023 when rates climbed back up to 2-decade highs. In April of 2023, prices only rose in just 19 metros, the lowest number since 2012, but prices have recovered over the last year as buyers have grown accustomed to elevated mortgage rates. I don't know how accurate that is. They're also climbing because there's a shortage of homes for sale. Last month, home prices posted their biggest gain in nearly a year, jumping 6.3% year over year to a median of $427,670. Nobody's buying houses, but prices keep going up, and the cost of a mortgage, interest rates, keep going up. This does not make any sense. I'm not going to lie to you guys. I have no idea what is driving this. It's got to be financialization. It's got to be something going on in the bond market is driving this. And then look, on the same day, we got this one from MacroEdge. Shout out to my buddies at MacroEdge. This was a great chart. This is showing new homes for sale by stage of completion. And this is completed homes, new homes that have been built, but they have not yet been sold. And this data is going all the way back to 1980. And if you look at where we are right now, and noticeably look at the change over the last year or two, we have got more new homes have been built, but have not yet been sold than at any time since 2009. You guys may recall 2009 was not a particularly good time to be in the new home business. So what is going on here? We've got rising inventory in most major areas. We've got a surge of new homes finished, not yet sold. You can see it on this chart, higher than any point since 2009. And yet the prices keep rising. What is making these prices rising? If you guessed financial dirtbaggery, well, then congratulations, you're probably on the right track. Guys, I'm not gonna lie. I can't figure out how the hell they're keeping this going. How are they keeping this can kicking down the road? Nobody can afford a new home. Nobody's buying a new home, and yet the price of a new home keeps going up. One of these things has to give soon. Also going on this morning, 3M stock rises as the company targets growth this year. There's some pretty important macro hiding in this story, which is why I thought this was worth covering this morning. 3M company stock rose 3.3% early Tuesday after maker of Post-it notes and Scotch tape and command strips posted better than expected fourth quarter earnings and guided for sales growth in 2025. Our fourth quarter capped a strong year of results as we returned to positive organic revenue growth for the full year, said CEO Willie Brown in prepared remarks. The St. Paul, Minnesota-based 3M had per share earnings of $1.33. That's up 17% from a year ago. Earnings per share, that's not adjusted, by the way. Earnings per share up 17% from a year ago. Meanwhile, sales rose 0.1% from a year ago. So look at those two numbers right there. When you've got earnings per share are up 17%, but sales were only up 0.1%. What could explain such a big jump in earnings per share without a big jump in sales? Well, there's two things. Either your costs have gone down substantially or you raised your prices. And in the case of 3M, I'm pretty sure both of those things happened. Remember, 3M announced thousands of layoffs. I think it was about a year and a half ago. 3M was just cutting headcount like crazy. So I'm sure they did reduce their costs substantially with all those layoffs. That could possibly explain why earnings per share are rising despite no rise in sales. But also price increases could explain that. So let's see, people losing their jobs, prices going up. Well, there's your stag and there's your inflation, your stagflation, J-Pow. That's what I think is hiding in these 3M earnings here. Now, we also got some other macroeconomic data to mention in here. The company is closely monitoring end market dynamics, such as auto builds that are slightly negative and consumer electronics demand that's up in the low to mid single digits. And it also noted that consumer discretionary spending remains soft. And one thing I would also mention is I think return to office is probably playing a role here. 3M makes a lot of office supplies, so I'd imagine people heading back into the office is probably contributing to that as well. But 3M stock is looking pretty good here, up 3.9% this morning, $146.75. That's up $5.72. And we have got Charles Schwab rises after earnings, top estimates on record inflows. Now, Schwab is not a stock I follow particularly closely, but there's, again, some pretty important macro data hiding in here. Charles Schwab reported results that exceeded estimates as it continues to attract record new inflows to its retail brokerage. Where is all of this money coming from? I'm hearing that consumer discretionary is soft in the 3M article. People have no money. People aren't buying houses. Well, all the money is just flowing into the stock market. Those who actually have any left at the end of the month who haven't been crushed by inflation. And that's the story here. Schwab is showing us the bifurcation within the economy. The wealthy are doing incredibly well here. Fourth quarter revenue grew by 20% year over year to $5.3 billion, topping estimates of $5.19 billion. Company posted adjusted earnings per share of $1.01, also exceeding expectations. Record net inflows into our managed investing solutions helped lift fourth quarter revenue, said the newly appointed CEO, Rick Wurster, who stepped into the role at the beginning of this year. Westlake, Texas-based Schwab called 2024 a transition year after faltering during the regional banking chaos of 2023. The firm appointed Wurster and new CFO Mike Verdeschi to return stability to Schwab, and so far earnings have improved. Total client assets were $10.1 trillion after passing $10 trillion for the first time in November. That just undershot analyst estimates of $10.17 trillion. And Charles Schwab stock is having a good morning, up 2.6%, trading at $78. Oh, I'm sorry. We are now open. The opening bell has rung, and the stock is up just 1.2%. I'm sorry, 76.41 for Charles Schwab stock. Still, though, the wealthy Schwab clients are doing very well, all things considered. And I just want to say thank you so much to Armando Reyes, who says, I woke up to a beautiful golden sunrise and blue skies. It's going to be a lovely day. Man, I don't know where you are, Armando, but I was looking outside. I think we had 3 degrees Fahrenheit yesterday. That's without the wind chill this morning. Mish said -9, I think he's got over there in Nebraska. I don't know where you are, Armando, but I could use some of those good weather vibes this morning. So sure, send them through the interwebs if you got them. I could use it. It is gross out this morning. I had to run the heat lamp out for the chickens last night because, well, single digits, birds don't like that so much. Thank you, Armando, for the super chat, for supporting the channel, sir. Charles G., thank you, sir, for the super chat. He says the MAGA king is back. He is. Look, guys, just keep in mind, whoever's in charge when it happens gets the blame for when it happens. And I just got to mention that the way he's attaching himself with the Trump token and the strategic Bitcoin reserve. Look, I like Bitcoin. I'm bullish Bitcoin. I own a lot of Bitcoin. It's my single largest holding now by far. That wasn't intentional. It just went up so much that's the case. But be careful. Crypto winter is coming, and he is attaching himself to it politically, which means when it happens, they're going to beat him over the head with it. So just keep that one in mind. Thank you, Charles, for supporting the channel. Thank you. T.A. Chapman says, all in on Trump coin and Melania coin, Jack. Yeah, I will not be investing in Trump token or Melania token, nor am I buying Fart coin or Hawk Tua or any of that other crap. I like Bitcoin, guys, and that's the extent of it. I don't get into altcoins or meme coins. I know we got some XRP people here. I don't buy that one either. I stick to Bitcoin. There's more gains to be had in other sectors of the market, but there's also way more risk to be had in other sectors of the market, and Bitcoin is enough risk for my liking. Thank you, T.A. Chapman, and thank you, Nashville Pasta Man, who says, Bridgestone 10% headcount cut emails go out today. Uh-oh. Bridgestone, the maker of tires, they're cutting headcount by 10%. More good news in the auto industry happening. Thank you for that information. I was unaware of that one. Supposedly the email's going out today. What do you know that we don't, Pasta Man? Very interesting. We'll look for that one. And I'm going to have to give you a shout out tomorrow. If we see stories about this one, I'll give you a shout out tomorrow on the live stream. And we'll say the Pasta Man doth call it. Thanks again, Pasta Man. Oh, he's back. Melonhead for 11 months. He says, good morning, Melons. Any Greenlanders in the chats? Any Greenlanders interested in becoming Americans? That's the other thing. Greenland has been renamed America Land, by the way. That's the other great issue facing our time. Look, I like the idea of Greenland becoming part of America. Is it going to happen? Probably not. Would I be pleasantly surprised if it did? Sure. 53,000 people, I think, live on the island. I'm sure there's plenty of resources there. It's also strategic, and I'm pretty sure it's got a lot to do with the Navy and Russia, but that's neither here nor there. Good morning, Greenland. Sure. Metals Banker, thank you. He says, Jack, golden age is upon us. All bubbles and crisis averted successfully. Time to shut down and enjoy the Trump train, or is it? No, guys, price discovery is coming sooner or later. You can avoid it for a short time, but you can't avoid it forever. There is just a huge reckoning in private credit, private equity, commercial real estate, artificial intelligence valuations. Crypto is getting into bubble territory again. The S&P trading at ridiculous valuations. Everything it is the everything bubble. And I didn't even mention housing. Yeah, the golden age. It is absolutely the golden age of fraud. And maybe that's got something to do with why Hindenburg Research shut down, right? Hindenburg Research is all about pulling back the curtain on price discovery. We have a market that has no interest in price discovery, so it's not a very good time to be a short selling firm. Again, they can delay it, but sooner or later that bird comes home to roost. Thank you, Metals Banker, for supporting the channel, and thank you, Becky Heffernan, for supporting the channel. Says happy to see the unicorns and rainbows being thrown out of the federal government. I don't want to see rainbow flags in any federal buildings. Thanks, Jack. Look, guys, if you want to fly a rainbow flag, fly a rainbow flag. If you don't want to fly a rainbow flag, don't fly a rainbow flag. I think the same thing could be applied to the Gadsden flag or the POWMIA. Like, you want to fly it, fly it. If you don't want to fly it, don't. And I don't think we need to bicker about it one way or another any further than that. Like, everybody just do you. I don't know. Mind your own business? Like, is that such a, oh, what a radical policy. Mind your own. Oh, my God. He's literally Hitler. Like, I don't know. Mind your own business was just always seemed like the way I was taught to do things. Anyway, thank you, Becky, for supporting the channel. Charles G says, I saw reactions after the TikTok ban, and I think people are actually addicted to it. It's scary how bad it was. Look, I got mixed feelings on the TikTok ban. You guys know how I feel about the CCP. I think the CCP, as far as governments go, and I have a general distaste for governments anywhere, CCP is the worst government. So they are the dirtiest dirty shirt. All right. So I have a particularly dark and cold and treacherous place in my heart for the Chinese Communist Party. That being said, TikTok doesn't do anything differently than Facebook or Google does, right? They harvest our data and sell it, and they manipulate us with algorithms. That's exactly what TikTok does. The only difference is TikTok does it for the CCP. So that's why I'm not on TikTok. I personally choose not to use TikTok for that reason. That being said, I definitely don't want my government telling me I can't should I suddenly decide to. And that's why I have mixed feelings on the TikTok ban. I don't really care one way or the other. Yeah, that's my thoughts on that one. Thank you, Charles G, for supporting the channel. And Brojo's 420 Cafe says, silver, when, Jack, frustrated stacker. Look, doesn't matter when. The thing about silver is you never spend money on silver. You only spend money on shipping and premiums. You just store wealth in silver. All right. This doesn't cost you anything. You're just storing it outside the banking system. All right. When silver's above $30, guys. I mean, take yourself back a couple of years. It's higher than $30. It's still looking pretty good. I mean, most people would say silver has not performed well in the last month or so, and yet it's still above $30. Again, I'm not that worried about it. I don't watch the price of silver day in and day out. The whole point of stacking silver is so you don't have to do those things. You don't have to be glued to a ticker. You can just go about your life. So don't sweat too much on the day-to-day. Zoom way out on the chart. Silver is overdue for a major correction on price. Gold has already had its major correction on price. I think silver's due. When? look, if I could tell you when, I'd be a very, very wealthy man right now. So nobody knows when, but it will happen eventually. Thank you, Bro Joe, for supporting the channel. And Metals Bankers, again, MAGA, then ban. MAGA now, he saved TikTok. I don't know what you're saying there, to be honest with you, Metals Banker. I really don't know what this means. Yeah, the TikTok ban, I said my piece on TikTok. I don't like the CCP, but I don't like our government either. I just don't like governments in general. And when one government is like, ban the thing that involves the other government, I'm like, just leave me out of it. That's the way I feel about the TikTok ban. I don't want it. I don't have a horse in this race. I'm not on TikTok. Thank you, Metals Banker, for supporting the channel. Nikki B says median sale does not equal rising home price. Well, median sale price does kind of equal median sale price. You could argue the price of the homes that aren't selling isn't changing, but median sale price is really the best data point that we have, Nikki. I mean, I'll be honest with you, I'm really scratching my head on it. It can be affected by things like the poor can't afford houses, so the average house that's selling is bigger, and therefore it's looking like organic price growth, but really it's just the homes at the higher end that are selling. Those prices aren't really moving. You can make a case for something like that, and there may be some nuance like that hiding in the data if you really parse it out. But just in general, like, what the heck with housing? I mean, everybody's afraid to move. Everybody's afraid to transact in the housing market because they know they can never get into something the same size of what they're in now at today's mortgage rates. And yet, why are the prices not coming down? They are being artificially held here. And that's why I just think it's financial dirtbaggery is afoot in the housing market. I can't put my finger on exactly what it is. All I can say is when nobody can afford the prices as they are and nobody can afford the mortgages to borrow to afford those prices, then the solution to all that should be lower prices. But it's been that way for 2.5, 3 years now, and it's still not changing. WTF, mate. WTF is going on in the housing market. Thank you very much, Nikki B, for supporting the channel. And thank you, everybody, for having your coffee with the Melon Heads this morning. Thank you guys for the super chats. Also, shout out to my magnanimous Melon Heads on Patreon and YouTube. Thank you guys for everything you guys do for the channel. Links down below should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Don't forget that like button and that subscribe button on the way out. Until next time, live small and dream big.